unvarnished, authentic character. I mean, he says what he thinks. Sometimes he's rude. You know, he called like the public county health officials fascists on earnings calls. He told analysts that their questions were boring and boneheaded. He thinks that Joe Biden is a damp sock puppet. I mean, he says what he thinks, and people like that. They like that authenticity. They respond to that. And it keeps him in the news, and it keeps him in the conversation. And even if he's in the conversation for bad reasons, he's still in the conversation. I mean, I think if you interviewed a bunch of people on the streets of Manhattan and asked them, who's the current CEO of GM, Ford, Fiat Chrysler, or BMW, like, I don't know if they would know who it was. But, like, people know who Elon Musk is, and that helps, you know, ultimately, I think it helps him.
Hey, Max, to that end, and what Dana was talking about, it doesn't always go well for Elon Musk. What happened at a Dave Chappelle show recently?
Oh yeah, this was the way we opened the story, and it was, I think, Dana's idea, just because it was such a contrast from kind of the response that Musk normally gets when he's in front of a crowd. You know, he gets up there, Dave Chappelle, performance in San Francisco, sold out crowd, giant arena show. You know, Dave Chappelle, of course, is a controversial comedian. You know, a lot of his act is about, you know, railing on, you know, the dangers of woke culture and things like that. You know, in other words, these are people who you would think would be fans of Musk's kind of right-wing, transgressive Twitter stuff. And they weren't. They were booing him. And just seeing that kind of turn, I mean, that's where we got the idea to write the story, because just like seeing that turn was pretty dramatic. And it really, and yeah, like Musk has a big fan base. They love him, just as Dan is saying. On the other hand, it's not clear how much more growth Tesla has. They need to grow to be so much bigger to justify the current valuation.
Dana, you did say he read the story. Did he respond to you guys? Wait. Did
well,
he?
I'll let Max take.
Go ahead.
I think I can. And then on the earnings call, there was a very interesting moment where an investor asked, you know, what, you know, about the sort of potential brand damage, citing a poll that we cited by YouGov, which is a, you know, scientific pollster. And Musk essentially said, you know, YouGov schmoogov, I got 127 million Twitter followers. And it was a really interesting moment because, first of all, a little bit of a window into what his strategy is, or, you know, if you're trying to find a strategy with Twitter, it's like, hey, I'm out there, I'm in the news, just like Dana said. People are talking about it, so it must be good. It also was a bit of a turnabout from the way Musk was talking about Twitter, you know, several months ago, when it was just like, oh, these followers are fake, you can't trust them, and so on. So super interesting moment, and I read that also as a response to the story.
Well, it's an incredible story. We've run out of time. We could talk forever on it. It does make me wonder, God, if he didn't buy Twitter, would we still be, I don't know, where would we be? But who knows? Guys, we got to run. Cover story of Bloomberg Businessweek. It's a killer. Bloomberg Businessweek columnist Max Chapman and Bloomberg News technology reporter Dana Hull, they wrote it. So check it out, the new issue on newsstands, online, and on the Bloomberg.
morning news headlines on Bloomberg Radio.
It is 2:53 on Wall Street. I'm Charlie Pellet, and BuzzFeed shares are surging by a record on news that the digital. It is 2:53 on Wall Street. I'm Charlie Pellet, and BuzzFeed shares are surging by a record on news that the digital media company plans to use OpenAI to bolster some of its content creation. BuzzFeed shares, they're up right now by 154%. Tesla shares are surging after Elon Musk teased potential for the car maker to produce 2 million vehicles this year, a topic we were just talking about, while minimizing the effects of drastic price cuts to the electric vehicles. We've got Tesla shares up now by about 8.9%. IBM delivered an upbeat annual sales forecast while announcing it will eliminate about 1.5% of its global workforce following similar job cuts the past few months by many of its tech peers. IBM shares, they're down right now by 3.9%. Job cuts at Dow, and with that story, here's Bloomberg's Steve Rappaport.
Dow Inc. plans to cut about 2,000 jobs in a push to save $1 billion in costs amid soaring energy prices. The chemical and plastic manufacturer in a statement says it will shut down operations, particularly in Europe. Dow is also cutting back on purchases of raw material as part of the effort to trim down after net sales fell 17% in the last quarter. In New York, I'm Steve Rappaport, Bloomberg Radio.
And Dow shares right now down by about 0.4%. Foot Locker also says it's cutting jobs across its corporate and support roles. And those are the company stories we're following this hour. I'm Charlie Pellet. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. Let's get a check on the latest world and national news. For that, we go to Nancy Lyons in the 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. Well, the nation's attorney general says a ransomware group has been put out of business.
Known as the Hive ransomware group, this network targeted more than 1,500 victims around the world since June of 2021.
Merrick Garland says the group was accused of extorting or attempting to extort folks out of hundreds of millions of dollars. Congressman Jim Comer says he expects 40 to 50 probes to be conducted by the House Oversight Committee that he now chairs. He tells Bloomberg one of his priorities is looking into how COVID funds were spent.
There was a record amount of spending in the name of COVID and in the name of stimulus, but yet nobody in the House of Representatives has had any type of oversight over that spending. And we hear reports every day about PPP loan fraud, about unemployment insurance fraud.
Congressman Comer says they'll also be looking into what happened with U.S. equipment that was used in Afghanistan. The National Archives is asking former presidents and vice presidents to check their personal records for any classified material or presidential records. This, of course, comes after classified documents were found in the homes of former President Trump, former Vice President Pence, and President Biden. All 5 Memphis police officers involved in the violent arrest of Tyree Nichols earlier this month have been charged with second-degree murder and have been taken into custody. Nichols, a black man, died in the hospital 3 days after the traffic stop. Body cam footage will be released either today or tomorrow. Memphis Police Chief Sarah Lynn Davis is attempting to lower the temperature and released her own video last night.
In our outrage and frustration, there's still work to be done to build each other up, to continue the momentum of improving our police and community relationships and partnerships.
Davis says all 5 officers were fired for violating the department's policy on excessive force. The FBI and the Justice Department are conducting separate civil rights investigations. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Back to you, Carol and Tim.
All right, Nance, thank you so much. Carol Master, Tim Stenevec here live in our Bloomberg Interactive Brokers studio on YouTube and also on Bloomberg Quick Take. Hey, this is our most read story in the Bloomberg today. It has to do with Morgan Stanley fining some of its own bankers more than $1 million each for conducting business on WhatsApp. This is something we've talked about before, also for conducting business on some other mass messaging platforms. The latest fallout from an industry-wide probe that saw U.S. regulators impose the record penalties for monitoring lapses. This has to be like, especially coming off the financial crisis, you should be very careful where you communicate Why are you looking at me? Tim's like,
it's like so
shoot,
easy.
what did I do? What did I do?
It's so easy to communicate with your colleagues over various, different apps, especially if they're in other countries.
Yes.
So because if they have an Android phone or something, then you're going to want to use WhatsApp or Facebook Messenger. Well, I don't use Messenger.
And maybe it was the pandemic. Like all of a sudden we were doing everything on mobile platforms in many ways and virtual platforms, and I don't know.
Well, check this out. The funds have either been clawed back from previous bonuses or will be docked from future pay. This according to a person familiar with the matter who asked not to be named, as the information has not been made public.
Yeah, it's interesting. The latest bank to require individual staff to bear some of the burden of an unprecedented regulatory investigation after it emerged that unapproved messaging platforms were being widely used to conduct business. Finance firms are required to scrupulously monitor communications involving their business to head off improper conduct. Go back to some things that have gone astray, if you will, at financial firms. And this is about monitoring everything to make sure everything is on the up and up. What?
Just use IB.
Cans and a string?
Just send them a message on your instant Bloomberg.
Right, Bloomberg platform. All right, everybody. We're watching the markets. We're getting ready to talk to our TV colleagues. Stocks bouncing around off our highs and lows of the session. The NASDAQ really the outperformer, up 1.3%. We're getting ready to chat about it all with our TV team. Bloomberg's Countdown to the Close starts right now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. About 60 minutes left to go in the trading session. Romaine Bostic here alongside Katie Greifeld. We're joined right now by our colleagues Carol Massar, Tim Stenovic. Welcome to our audiences across Bloomberg Television, Radio, Quick Take, as well as streaming on YouTube. And I think, Carol, we looked, last night when we were after hours here, looking at the earnings that we got out of Tesla, including IBM here, but Tesla really seemed to set the tone for the rally that we have today.
It's pretty remarkable, the amount of momentum it has given to the overall trade, the upside that we're seeing. So I kind of wanted to look for what else is outperforming. Guys, I went back there, check out the Chinese names here in the United States. NASDAQ Golden Dragon China up 3.2%. I'm not sure I'm seeing any specific reasons why, but again, we continue to see investors push this higher. What?
Sorry, I'm just going to break in here. We're actually getting some breaking news right now. Bed Bath & Beyond shares, which have resumed trading, down about 21%, now confirming that it has received a default notice from J.P. Morgan. This, of course, has been the big issue ever since it made that going concern announcement back in early January, not just whether it would file for bankruptcy, but how creditors themselves would react. Bed Bath & Beyond now saying that the creditors are demanding immediate repayment on a loan. It's not quite clear exactly what loan we're talking about, but they do single out J.P. Morgan. Bed Bath & Beyond shares, guys, now down 24%.
Yeah, pretty remarkable to see this. Back to the bigger trade, though, Romaine, I'm a little surprised to see so much weight being put into Tesla's results. Look, the company did say that, Elon Musk, I should say, does say that he expects, to sell 2 million cars this year, which would certainly be an ambitious goal. But given the mixed economic data that we got earlier today, Katie, not everything is totally rosy.
Yeah, but I mean, that being said, you did have GDP come out above consensus on the headline. There were some things to get worried about if you look at personal spending. You also got, I don't know, the labor market is still tight. It kind of depends on what perspective you're taking, the perspective of an actual person in the economy or whether you're the Federal Reserve.
Okay, sorry, guys. I'm still looking through this Bed Bath & Beyond statement. This is an important story here. And just looking through it, they do talk about a revolving commitments that were led by J.P. Morgan. Based on them, it looks like the original commitments were for about $1 billion. It's not quite clear, just looking at glancing through the filing, exactly what they still owe. But again, Bed Bath & Beyond making it clear here that they have received a default notice from J.P. Morgan with regards to some degree of revolving credit and immediate payment being demanded by those creditors.
Yeah, and to be fair, I mean, first of all, the short position on this one was pretty substantial. 46% of the float was shorted. It's been a story we've been talking about for some time. It's one of those, go back a couple of years, we've been talking about kind of the bloated retail sector. And in some cases, Katie, there are just certain retailers that maybe are not necessary or the strategy hasn't been working. And this is something that Bed Bath & Beyond, I feel like, for some time has been trying to figure out.
Yeah, and those obvious problems were still there even when the stock was going crazy earlier this month. Remember when it was surging, what, double digits in a day, 60, 70%, obviously some reality hitting.
There's a lot of questions here about what other types of Bed Bath & Beyonds are out there. We know that there were a lot of idiosyncratic issues, Carol, with this company, but there is a broader issue here about companies that are in these credit agreements. They either need to refinance or they have certain terms in which the lenders can sort of get those clawbacks. And is this sort of the environment we're in right now where we're going to start to see more and more about that? The easy money era is over. We know that. The question is, who survives that era?
Perhaps it's also about companies that operate in similar spaces. You know, retailers that once had a very large footprint, and the business has changed significantly. Remember back a couple weeks ago, Romaine, the news that, you know, Party City was having troubles of its own.
Yeah, quite a few companies I think have been flagged. I know the folks here at Bloomberg track a lot of the potential companies. We should point out these companies, or at least not Bed Bath & Beyond, aren't in the bankruptcy process yet. But we do know there is a lot of stress there. And if we get to a stage where they can't roll over this debt, then that's basically the killer. And how much did we talk about zombie companies over the last few years? Because with zero rates, you could cut, it didn't matter how strong your business was. If you can continue to refinance it, whether it was through the banks or through the public market, you could keep going.
Pema Parmar just yesterday having a story about startups specifically. It was so easy to get money over the, before everything started to change in terms of rates going up and the market tightening. It's a very different environment when the tide goes out. You get to see what doesn't make sense anymore, and investors become much more pickier.
Absolutely. Here, we do want to turn back to the broader market. We continue a broader rally, but again, that is led by some of the big cap tech names that even though they may be seeing moderated in growth and maybe some margin pressure, these are still names that have a certain degree of resiliency. And I think that's what we're seeing people flock back to, at least today and certainly over the last few days.
And if you look at the sector level, there's resilience and then some. You can see energy way out in front, up almost 3% as a sector. Consumer discretionary also in the green as well, as is tech. You look at what's not doing so well, consumer staples down about 0.2%. Healthcare just off a little bit there.
Let's go through a couple of other individual names. Everyone focused on Tesla, but actually the big mover today in the S&P 500, believe it or not, that belongs to Seagate. Those shares up 12% here on the day. I thought it was interesting to see some of the commentary we got out of Sherman-Williams. Those shares down 9%. And remember, guys, a lot of the industrial companies have actually been much more dour than I guess some of the tech and growth names that we have been looking to as well. And then, of course, two interesting stories here. Chevron with a gigantic buyback, though pushing those shares up 5%, and then earning a little bit of criticism from the President of the United States, who, of course, has been in a battle with a lot of these companies. And Levi Strauss shares up 7%. The CEO there, guys, saying skinny jeans, they're still in. They haven't gone anywhere.
I hate skinny jeans.
Well, they said women's skinny jeans doing well. Flip it up real quickly. Let's go back to the macro picture here. We got those jobless claims, Carol. I am curious to see what you think about it, because this is a conundrum the Fed is in, a labor market that still remains strong.
Let's remember, some of these notices that have gone out, it's going to take some time before they show up in the numbers. That's something to keep in mind, which is also why we love that our team caught up with Jonathan Gray over at Blackstone. He's the president and COO, They've got a portfolio of companies. They see a lot, and he gave some indication of what's going on with them, specifically on some of the key metrics we follow, like inflation. Here's what he had to say.
The inflation pressures seem to be abating. Commodity costs, shipping costs, they're coming down. The labor market we're seeing in our portfolio is starting to cool. We actually have a third less job vacancies at our company. Wages, which had been running at 7% in North America last year, are now down and up 5.8%. So inflation coming down takes off the biggest risk.
All right, that's John Gray, president and COO of Blackstone, the massive private equity firms. Right, guys, this is so important, kind of some of the color we get from these kinds of folks to kind of fill in the holes with those economic data points that are often conflicted. We got to run. We will be back in less than an hour's time. Our cross-platform coverage, radio, TV, YouTube, and of course, Bloomberg Quick Take. We will count you down to the close and also break down Intel and Visa earnings. They're coming up after the close.
Yeah, important.
All right, everybody, you are listening to Bloomberg Business Week. Carol Massar along with Tim Stanovic.
Hi. A lot of breaking news just now.
Well, it's interesting. I think, it's a story that what we need to, what we're going to be on the watch for is other pockets of weakness, generally when it comes to companies that might be in a tricky way. In the meantime, I feel like Tesla and the EV world, we've been talking about it a lot lately.
Yeah, we really have. A story in the current issue of Bloomberg Business Week. It's just out on newsstands. It's online at bloomberg.com/businessweek, and of course, always on the Bloomberg terminal. Carol, it's a story about how made-in-China cars are primed to conquer the global market. It's certainly timely, considering our focus on Tesla and EVs today.
Yeah, I love it, and I just feel like the EV space, right, we've often focused on the sector, they're rallying. So let's get to it. What's going on in China, because it should be on your radar. Jim Ellis is Assistant Managing Editor at Bloomberg Business Week. He joins us via Zoom in New Jersey. Jim, so glad to have you here with Tim and myself. As we said, this is a new story in the new issue of Bloomberg Business Week. What's going on with China when it comes to just the car market overall? They're getting big.
They're getting very big. I mean, what happened during the pandemic was that a lot of people took their eyes off of sort of the way that growth was happening outside the U.S. A lot of their focus was put on, oh my God, what about the supply chain? What about, just sort of getting workers to work? And instead, China continued to crank out cars over the period. And so what's happened quietly while the U.S. didn't see it is that China now has surpassed both the U.S. and South Korea in the number of cars that it exports. People don't normally think about China as being a car exporter in a big way. I mean, God, they barely had an auto business until the mid-'80s. And so now they have, they're neck and neck with Germany. Most likely they will pass Germany this year, and that leaves them second only to Japan in the number of cars exported in the world.
Perhaps it's surprising to a lot of Americans because we don't see Chinese-made cars on the roads here in the U.S. Jim, where are these cars going?
Well, most of these cars are going to Southeast Asia, Latin America, and to Europe. They purposely have decided to go after the markets that they think that they can make a big, sort of ripple through first. And they have become very big, actually, in places like Europe, where you can buy brands like BYD, brands like NIO, the Xpeng. These are brands that are big deals in other countries. They're not here. However, the way this works is that you gain global scale by getting, a lot of cars up for exports. Actually, we are seeing, a U.S. brand that we all know, Tesla, which has about half of its cars, a little more than half of its cars, are actually produced in China. And a lot of them are exported to other places around the world, particularly to Europe. And, that is the way that things started out, with a lot of joint venture partners that are making and learned how to make cars from Western companies and Japanese companies and Korean companies that had to have a partner within China. I mean, that rule has been loosened some now, but the Chinese have been really good at figuring out how to do this business. And because electric cars are a lot simpler to build than the old internal combustion engine cars, they've been able to sort of get the quality up by using lots and lots and lots of robots, to the point where they are sort of comparable now in quality to U.S. makes.
So it's all electric, Jim?
No, it's not all electric. Okay. I mean, it's a mix. I mean, electric is the big, fast-growing part of it, but they have a really big business in, internal combustion cars that aim at Latin America and Southeast Asia. Electric is sort of where you're going to see a lot more of a ripple in Europe. That's happening now with brands like, Xpeng and, the BYD brand. But BYD is in Australia now. We just don't see them here, but they are coming. And the idea that the head of the Chinese Automobile Association told us was that they hope that in 4 or 5 years, they will have double the number of cars exported than Japan does now.
Hey, for our folks who are watching on YouTube and Quick Take, we were just showing what's going on with Geely Automobile, the ADRs that trade here in the United States, up 14% so far in 2023. They're up another 4% in today's session. Who knows if it has something to do with this story in Business Week? What?
I want to know, I might have made a mistake, Jim, because I do see some Polestars on the road here in the U.S. Are those made in China?
Those are made in China.
Okay.
And, actually, in our story, we had a guy in Britain who bought one and waited 4 months for it to be shipped from China. Wow. And everyone was saying, oh, it's not going to be a great thing. It turned out to be a wonderful build quality. He's really happy with it. And that's the surprising thing. We went through a period up until 2007 where a lot of people thought that the build quality of, and the safety ratings of product that was built in China was going to be so subpar that they'd never be able to make it in global markets. That's proven not to be the case. And the big reason is automation and robots, and the idea that a lot of their auto factories are, relatively new, as opposed to here in the U.S. We have factories that have been building cars for 50, 60, 70 years, some of them.
Jim, what about when it comes to Volvo? It has the same parent company as Polestar, Geely, as Carol mentioned. Are Volvos that we see in the U.S. made in China, or are those still made in Sweden? Or even in the U.S., actually?
I mean, it's a mix. I mean, that's the thing. That's what's happening now with a lot of cars is that they're being built in various parts of the world and then branded under a central brand. For example, the Buick has a small SUV that actually is made in China by a GM joint venture there. Now, they don't make a big deal of saying that, but if you drive a Buick Envision, you're driving a Chinese car. That's probably the biggest Chinese car in the U.S. right now because that has not been a prime market for China to aim at yet.
So interesting. Hey, Jim, I'm thinking Made in China 2025. So this is part of it, and it's working?
It's working, and it's going to continue to work for a couple of reasons. The number one is that they have such a huge local market that it gives them the scale to be able to sort of manufacture at a global rate. In other words, companies that build large numbers of vehicles can do it at a lower cost per vehicle. Also, you have the scale to be able to invest in these hugely expensive factories. It's going to continue on for them. Also, because China desperately wants to raise the level of manufacturing that they do. They like being the world's factory, but they don't want to be the factory for just toys and cheap electronics and stuff. They want to move up the value chain, and that's something that the politicians have been pushing, and businesses have been jumping after it.
How much of what China is able to do today when it comes to the EV market, the automobile market overall, is because of those joint ventures that they did 20 years ago with other Western companies or Western-based companies, whether it was Germany, whether it was the U.S. Because I just remember right early on when so many of those big, companies were multinationals were looking to get into China. They're like, sure, come in, but we're going to do a jointly owned factory, and we're going to probably learn from you.
It was the only way that the Western companies in Japan and Korea could play in that game. You had to come in with a joint venture partner. And that was the case all the way up until Tesla, which was the first company allowed to have its own operation. But instead, for that 20, 30-year period, the Chinese were able to, work hand in hand, watch how these things are built. So the most important technology was supposedly separated away from them, so it couldn't be taken. But they learned a lot. They learned a lot about manufacturing what is basically the biggest consumer product in the world, automobiles.
Yeah.
High value product that works not only within your own country, but it's a great thing for export. And it's given them a great export vehicle and a way to sort of push their soft power in parts of the world where, like Latin America, Southeast Asia, Africa, where their vehicles don't really have a lot of competition from the Western brands that we think a lot about.
For people who are interested in just how Elon Musk pulled that off, there is a great Business Week cover story in the last couple of years that really dove into this, so I highly recommend that you check that one out. Okay, so Jim, what about when it comes to sort of risks that, developing, like continued trade war with China, COVID-0 issues, those sorts of things that really held the country's economy back over the last couple of years, affecting the car business?
And just got about 45 seconds.
Yeah, well, the real issue here is that sooner or later, the Europeans especially are going to say, now you're starting to move into a part of our economy that we want to maintain. And so there's going to be trade fights over all these imported cars coming in, particularly since the costs in China are much lower than the cost to manufacture in much of the car making world.
What I find interesting in this story, it talks about the growth in the supply chain in China has also kept pace with car manufacturing. Domestic companies now make almost all parts, including those that they used to import until about a decade ago, such as high-strength steel and reinforced fiberglass. Very different from, certainly, the U.S. auto supply chain.
It's pretty incredible to see, like I said, it's like at first glance, you don't kind of understand that a car could be made in China because you don't associate that brand with China.
Yeah.
But Volvo, for example, right?
Yeah,
Owned by Geely.
Yeah.
Polestar.
Exactly. Jim Ellis, thank you so much. So appreciated. Assistant Managing Editor of Bloomberg Business Week magazine, joining us via Zoom in New Jersey. As we mentioned, the new issue of Bloomberg Business Week is out. This story is in it, as is the cover story on Elon, on newsstands, at Bloomberg.com/businessweek, and of course, always on the Bloomberg terminal. You're listening and watching Bloomberg Radio.
headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. I'm Charlie Pellet. We've got 19 minutes to go ahead of the closing bell. We do check markets all day long at Bloomberg. Now let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks with a bid today, helped by a 10% earnings-related move in Tesla. Dow's currently up 156 points. S&P's gained 34, and NASDAQ is higher by 162. The U.S. 10-year yield at 3.49%. Gold is down 16. Oil trading in the green and Bitcoin is lower by 2.3%. Among the main 11 S&P sectors, leaders were energy and consumer discretionary. Staples and healthcare were the only sectors in the red. And leaders to the upside in the Dow, Chevron and Salesforce, while IBM fell 4.1% after earnings and led to the downside. Also after earnings, Sherwin-Williams fell 9%. And in other news, Salesforce is set to discuss appointing new board members. And Bed Bath & Beyond says it received a default notice from J.P. Morgan. Those shares are plunging 20% right now. Wrapping things up, some of the names reporting after the bell tonight include Intel and Visa. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg, type Squawk, S-Q-U-A, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We've got a most read story on the Bloomberg we're going to get to in just a moment. It's a great one, Tim.
Bloomberg Business Week is brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. The ERC isn't alone. It's money your small to medium-sized business may be eligible to receive for keeping employees on payroll in 2020 and 2021. Get an estimate of your company's potential refund today. Learn more at getrefunds.com.
Well, this is a story that is a most read one that we've really been following for the last week or so. It's about one of the richest individuals in the world and the short seller, Tim, who is basically saying he and his sprawling conglomerate, they were fraud, basically.
Yeah, the story's by Ed Ludlow and Catherine Burton. We've got both of them with us. Ed's Bloomberg News co-host of Bloomberg Technology. He's in our Bloomberg 960 studio in California. And we got with us Kathy Burton, senior reporter for Bloomberg News, with us in the Interactive Brokers studio. So, Kathy, I want to start with you. Hindenburg versus Adani.
Yes, it's really a tiny...
Well, it's like David versus Goliath in this case. I want to start with Goliath here and who this billionaire is.
Well, he is one of the richest people in the world. He has a huge number of different companies and close ties to Modi, the head of India. And then we have Nate Anderson, 38-year-old guy who is an activist short seller. And he decided he was going to go after Adani.
All right, so Ed, come on in on here. What's the case that that is being made against Adani by this short seller?
Yeah, so I mean, Adani is sort of a business mogul, right? He runs a conglomerate,
massive, right?
Right. Well, Rich Go on the Bloomberg terminal, right? World's fourth richest man. But it's a series of companies that do everything from sort of concrete to Indian media companies. He's kind of bought up some more international businesses. And, you know, this is at a much bigger scale from what Hindenburg Research has done in the past. But they basically do deep research. This took 2 years of investigation, Hindenburg says. And they basically accuse Adani of a wide range of things, but one is the diversion of company funds through shell companies for sort of improper benefit. And by the way, you know, in stories like this, very important to state, you know, Adani, the conglomerate, his representatives, they all dispute and have threatened legal action against Hindenburg in response to these allegations. But, you know, in my experience of covering Hindenburg Research cases, this is probably just the beginning of the story.
Well, I wanted to get to that, Ed, because, you know, as you guys write in the story, Hindenburg has got the attention of Wall Street because he took down electric vehicle makers, Nikola and Lordstown Motors. What's its track record?
Yeah, I mean, relatively successful. You know, they have a brief history, to be fair. You know, I think Nate only incorporated Hindenburg Research in 2018. But, you know, in 2020, you guys will remember I reported that story in June of that year that Nikola's founder, Trevor Milton, had exaggerated the capabilities of its debut truck. And that was in June of that year. In September, Hindenburg Research came out with a pretty broad report on Trevor Milton and the company, and basically corroborated the report that I had done in June, but also made a series of other allegations against Trevor Milton that he had basically made misrepresentations to investors. And all told, you know, very quickly, Trevor Milton was forced to resign that month in 2020. Fast forward to present day, and at the end of last year, Trevor Milton was ultimately found guilty of several counts of wire and securities fraud. So you ask about his track record. Well, in that particular instance, Milton was the target of Hindenburg's research. And I reiterate what Kathy said. They are short sellers, right? So they set to gain from a drop in any company's stock. But the net result was that founder has been found guilty of a criminal charge.
You know, Kathy, you type Adani, into the Bloomberg terminal. A lot of his different, holdings and businesses come up, so you realize kind of the breadth of what he's doing in his big conglomerate. As you and Ed were working on this story, what is it that kind of struck you and what you wanted to find out?
I think we wanted to find out how Nate does what he does. We were very curious to find out how much money he's put into this and how much money he's made in some of the other shorts, and we weren't able to do that. But if you make a chart of all the companies, the 20 or so companies that he's had reports on since 2020, on average, I think 3 months after the reports, they were down something like 20%. So most of the things seem to have worked out.
So, Kathy, what's in this report, and what tends to be in a report that Anderson releases? These are pretty detailed. I mean, as you mentioned, 2 years he spent doing this.
2 years and hundreds of pages or close to 100 pages, and he looked at went into registries and looked at all the companies, and some of them didn't seem to be real companies, for example. And Ed had mentioned some of the other things that he found in this report.
Yeah, I mean, Ed, as you guys were working on this story and looking into it, I'm going to do the same question to you, in terms of what you guys were looking for. Because, like I said, you type in Adani, and there's just so many different businesses. And to me, it's like, okay, wait, I want to understand the relationships. And I almost feel like with crypto, right? We went through this whole thing. It's like lack of transparency, understanding. I'm not saying apples to apples, but you want to kind of understand the relationships, right?
Yes. I would say two things here. The first is that, Hindenburg is a research firm. It's not a hedge fund, and they kind of pride themselves on digging out information from kind of lesser known obscure sources, right? They look in places that traditional financial research firms don't look. And some of those Kathy kind of just outlined. The other thing I'd say is like this David and Goliath situation, as Tim described it, is accurate. Hindenburg Research is approximately 10 or 11 people, financial analysts, former journalists. They do digging, right? And their methods are very secretive. They use their own capital. They are not a hedge fund, although they have had hedge funds participate in their shorts and in their research. There's an element of mystery about them, but that's not necessarily that they themselves are being secretive or deceptive. They're just going about their business quietly. They come out with these reports. And, the other thing I just want to point out really quick, guys, is, Adani did threaten legal action, and Nate and Hindenburg's response today was, bring it on. We welcome it, right? Because they feel like they have nothing to hide. Their research is out there.
Well, Ed, how do they, if they're not a hedge fund, they do take financial positions that reflect their research. And again, we don't know how much money they've made, but since they're not a hedge fund, do you have any idea the types of positions or the scale that they do?
Honestly, no. In this case, in the Adani case, they shorted some U.S. debt and some non-Indian listed derivatives, because remember, all of the conglomerates that we're talking about here are Indian companies or Indian domiciled companies. Honestly, for our global audience, I've asked all these questions, and we've not heard answers back, right? We don't know how much of their own money they have. We don't know the sort of mechanism that they use to short. Is it a traditional short position or, short borrowing? We don't know. We've asked, as in our duty as journalists, but, they are doing this in the normal course of their business, and they kind of want to keep quiet about it.
So, Kathy, when a company that is being targeted by an activist or by a short threatens legal action, does that ever, in your experience, in your reporting, just in the last minute that we have, hold any water? Are they successful in going after these shorts or activists?
There's definitely been cases where they've gone after activists, and then at the end of the day, the cases get eventually thrown out.
So they go after, but it's not successful.
Right. And then I think in this case, Nate is happy to have them do it, because if they do it in the U.S., then you can also learn a lot through discovery.
as well.
Good point.
Exactly, right? Stuff becomes known and you get a little bit more information. Well, it's a really cool story, as I said. Various stories about this have been on the Bloomberg over the last, I guess, couple of days, week or so. I forget when this kind of started, right? Do you remember? Yesterday. Oh, it feels like it was longer. That's our life. That's my life.
2 days that have felt like a week to Carol Masser.
That's how it feels. Guys, we so appreciate, though, you breaking it down. As we said, it's among our most read stories in the past 8 hours that feel like a million hours to me, apparently. Ed Ludlow, co-host of Bloomberg Technology. Catch him on Bloomberg TV at 5 p.m. Wall Street time. Joining us from our 960 studio in San Francisco. Here in our New York studio, our Bloomberg Interactive senior reporter at Bloomberg News, Kathy Burton. Really appreciate both of you. Thank you.
Let's get to Washington, D.C. for a check of the latest world and national news. For that, we go to Nancy Lyons, who's in our 99.1 newsroom. Hey, Nance.
Thanks, Tim. President Biden is hailing today's GDP report that beat expectations for the last quarter of 2022, and he told union workers in the Washington, D.C. suburbs this afternoon it's proof his economic plan is working, but he warned it could come crashing down if Republicans have their way.
We're moving in the right direction. Now we got to protect those gains. We got to protect those gains that our policies have generated. Protect them from the MAGA Republicans in the House of Representatives who are threatening to destroy this progress. Look, you know, this ain't your father's Republican Party. This is a different breed of cat, as they say.
Biden says Republicans want to tax everything and mentioned one GOP proposal to impose a 30% sales tax on everything. That's part of a Republican plan that also calls for abolishing the IRS and eliminating income taxes. Well, criminal charges have been filed against the 5 former Memphis police officers involved in the violent arrest of Tyree Nichols. Shelby County District Attorney Steve Mulroy making the announcement just a short time ago.
Earlier today, the grand jury returned indictments against 5 former Memphis Police Department officers regarding the death of Tyree Nichols. These are the same 5 officers who were previously or recently terminated by the Memphis Police Department. They are currently in custody.
Steve Mulroy apologized to the family of Nichols, who died in the hospital days after a traffic stop involving the officers. The body cam video of the event will be released tomorrow. Employees of the government contractor linked to the massive air traffic control error that grounded thousands of flights earlier this month, well, they've had their access to the FAA's computer system revoked. The FAA had said unnamed personnel inadvertently deleted a data file while troubleshooting the system. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. I'm Charlie Pellet. We have got the Dow, the S&P, NASDAQ all higher, holding on to gains with just about 19 minutes to go ahead of the closing bell. Right now, we've got a rally in mega caps with the S&P up 34, up 0.9%. The Dow is advancing 143, up 0.4. NASDAQ, the composite index, up 165, up 1.5%. NASDAQ 100 index up now by 1.7%. S&P, by the way, pushing toward its highest close since early December. 10-year yield right now, 3.49%, with a 2-year yielding 4.18%. Bloomberg opinion columnist Mohamed El-Arian says the Federal Reserve should go with a larger than expected rate increase of 50 basis points next week. Investors looking ahead to that Fed decision and, of course, the news conference from Fed Chair Jay Powell. Deborah Cunningham is Chief Investment Officer for Global Money Markets at Federated Investment Management.
Although Powell didn't necessarily talk about 25 or 50, he didn't deter others from going the 25 basis point route. So I agree with El-Arian. I think that 50 would be a good wake-up call to the marketplace. I don't think that's what they're going to do, though, based on Fed speak.
Foot Locker says it will cut jobs across its corporate and support roles. Foot Locker shares up by 5.9%. The chemical maker Dow says it will cut 2,000 jobs in a $1 billion cost savings push. Dow shares are up now by 0.1%. Chipotle Mexican Grill adding 15,000 jobs across its North American locations, a sign that demand for restaurant food is remaining robust. Chipotle right now up by 2.7%. Again, we've got the 10-year yielding 3.49%. S&P up 36, up 0.9. Spot gold down 0.9%, 19.29 the ounce. West Texas Intermediate crude up 1.2%, 81.14 a barrel. And that is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, get ready to count down to the close.
Are you ready? Are you getting ready? These couple hours flew today. It usually flies, but I mean, we're 17 minutes from the close.
Time flies when you're having fun.
It does.
We're off our worst and best levels of the day, but we're getting ready for some big earnings after the close. But it does feel like that risk-on sentiment continues to really drive the equity trade higher.
It's puzzling to me.
Yeah.
But
Why?
maybe it's not puzzling to
Because
Aaron.
of the economic news?
Yeah. But you know what? Maybe that's why I do this instead of run money for a living. Who knows? Aaron Kennan is the co-founder and CEO of Clear Harbor Asset Management. They've got over $1 billion in assets under management. He joins us this afternoon via Zoom from Stamford, Connecticut. Aaron, Happy New Year. We haven't had you on in a few weeks, so I think I'm still allowed to say that. How are you?
Doing just fine. Thanks for having me back, Tim and Carol.
Well, year to date, the S&P 500 is up 5.5%. The NASDAQ composite up close to 10% already. Are markets getting ahead of themselves?
Well, certainly technicals have improved, as you just alluded to, whether it's the advanced decline lines or 200-day moving averages. I think the market is trying to peer through the next set of steps on the liquidity side, specifically how the Fed is going to respond. I think 25 basis points at the next meeting is sort of somewhat cooked in the books, as they say. Last year, somewhat massively. So that liquidity may be returning in the back half of this year, and I think the markets are perhaps thinking about getting ahead of it.
Hey, Aaron, do you think this is a market that's trading like a possible recession might be coming?
I think the market is of the view that we're either in a sort of zero growth environment. We could be possibly slightly negative, slightly positive at this moment. Now, of course, we saw Q4 GDP this morning was quite positive, but positive on the heels of a lot of inventory rebuilds. I don't think the market's prepared for a significant earnings recession. If you look at sort of where the market is right now at 4,065 or so on the S&P 500, and $233 of anticipated earnings by the average analyst estimates at the beginning of this year, it's at about 17 and a half times multiple. That's, well above the 25-year average that we have seen. So if we go into a 10% recession from, let's say, $221 of full year earnings in 2021, I'm not sure which multiple you put on that, but I don't think you put 17 and a half times. You probably put something closer to 15, and you're at 3,000. That's not my base case, but if you really believe in a deeper sort of earnings recession, I think you have to start thinking that maybe we're at the upper end of a range here for the S&P 500.
What is your base case?
I think we probably skate along at the sort of zero growth bound, and perhaps we start to see the Fed become much more accommodative in the back half of the year. We see a return of liquidity, but we see economic conditions continue to sort of deteriorate. I think if you look at the economy prior to 2022, which was not a great year for the market, and you look at the 10 years prior to that, we had GDP growth probably accrue heavily to the markets, to capital. And I just, sort of think about what happened during COVID. Now you have reticence on the part of employers to fire, even as they're seeing a bit of an economic slowdown. And it makes me wonder whether or not the next several years of GDP growth will accrue more towards labor, will accrue more towards the real economy rather than to markets. And so it's something we're thinking about here. Could we be in a position where we go into sort of a weaker economic picture, but employment remains on the margin a little stronger than we expect relative to the data points?
Yeah, we've talked a lot about that, Aaron, this possibility of having somewhat of a recession here in the United States, and yet the job market is still doing okay, if you will, which would be something, new for all of us. I want to go back to market sentiment at the end of the year. It just felt like nothing could, kind of move out of the doldrums and the negative tone of 2022. Has the tone changed? Have the fundamentals significantly changed here now that we're almost wrapping up the first month of 2023?
It's interesting. I mean, certainly we've seen a market shift downward in rates, as it looks like maybe we've seen peak inflation. So I think that's a bit of a relief point. Now that could shock to the downside if we start to see data that suggests otherwise. If you're in this sort of Larry Summers camp, maybe the Aryan camp, well, we should do 50 because we haven't beaten up this inflation dragon yet. That could prove bearish if that sort of thesis becomes base case in reality in the months ahead. It's not our base case. I think if you look at M2 money supply growth, you look at supply chains, you look at some of the deterioration in general, commodity deceleration. It seems as though the narrative of inflation decelerating is the actual reality, and the question is where do we settle from here?
You mentioned that you think that the Fed could become much more accommodative in the second half of the year. What did you mean by that? What do you think they'll do?
Well, I think they'll have to take a look at the data, but if we look at the leading economic indicators, we look at retail sales, we look at home sale prices, we look at the general sort of increase in cost of funding everything. One could argue that the economic picture may deteriorate further from here. So a pause, perhaps after the next 25 basis point hike, is possible. And could we see them cut rates this year? Your guess is as good as mine, but I think it's very much data dependent. And if inflation trends lower and data on the economic side deteriorates, I think it gives Fed wiggle room to cut rates at the end of the year or towards the end of the year.
Yeah, I do feel like we live from data point to data point at this point. And we'll see what the Fed has to say next week when we get that first Fed decision of 2023. Hey, Aaron, thank you so much. Happy New Year from me as well. Aaron Kennan, co-founder, chief executive officer at Clear Harbor Asset Management. They've got approximately more than $1 billion in assets under management. He's joining us via Zoom from Stamford, Connecticut. Carol Master, Tim Stanovic. We're going to talk about the market soon with our TV team. This is Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. 3:53 now on Wall Street. Tesla shares are surging ahead of the close here. We've got Tesla stock up by 10.7%. This after Elon Musk teased potential for the car maker to produce 2 million vehicles this year and minimize the effects of drastic price cuts to its electric vehicles. IBM after earnings, though, heading in the other direction. IBM down now by about 4.4%. It did deliver an upbeat annual sales forecast while announcing it will eliminate about 1.5% of its global workforce following similar job cuts over the past few months by many of its technology peers. Chipotle Mexican Grill is gearing up for a hiring blitz, and with that story, here's Bloomberg's Steve Rappaport.
Help really wanted at Chipotle. The Mexican food chain is adding 15,000 jobs across its locations in North America. Chipotle has more than 3,000 restaurants in the U.S., and the push is meant to ensure they'll be fully staffed for the company's busiest season, stretching from March to May. Chipotle reported a 15% gain in revenue for the first 3 quarters of 2022. Fourth quarter results are coming out next month. In New York, I'm Steve Rappaport, Bloomberg Radio.
And right now, Chipotle shares are up by 2.5%. Bed Bath & Beyond says it received a default notice from J.P. Morgan Chase after it failed to prepay an over-advance and satisfy certain creditor positions. Right now, we have got the Dow, the S&P, and NASDAQ all higher. Intel, KLA, and Visa reporting after the bell. Those are some of the company stories, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, just got about 4.5 minutes left in today's trading session. Top of mind is certainly Intel earnings. We'll get those after the closing bell. Stock's been a little bit higher ahead of it. We've been talking about this certainly here at Bloomberg. And we also have, what is it, Visa?
Yeah,
Visa's going to report.
Visa's out there. Visa's coming out as well. It'll be interesting to see what Visa says in the wake of what we heard from MasterCard earlier, because the stock is lower after warning that revenue growth would slow even faster than expected this quarter. That has some investors concerned that inflation has put a damper on consumer spending.
Well, and this is where you have to look at is if numbers are higher, is it just because of higher prices, or is it a bigger spend? Because we've seen that MasterCard specifically talking about card spending slowing and hurting some of the revenue growth. So we'll see if whether or not we get that from Visa as well. Can we just totally take a 180? Because I love this story. James Dolan threatening to halt alcohol sales at New York Rangers hockey games in response to the state's investigation into his use of facial recognition technology at properties owned by Madison Square Garden Entertainment. He is, of course, the company's chairman.
Dolan said in an interview with Fox 5 that the New York State Liquor Authority has been extremely aggressive in its investigation and has threatened to take away MSG's license to sell alcohol. Dolan said he believes officials are targeting his license to generate publicity. Yeah. He said it's not going to bother him because he's been sober for 29 years.
Yeah,
but the revenue might bother
There's
him.
some backstory to this. I mean, the New York Times reported on January 16, MSG Entertainment had sought to block lawyers engaged in litigation with the company from entering the properties, and those lawyers filed complaints with the State Liquor Authority, among other entities, according to the newspaper. And I guess they were able to pick out those lawyers because of facial recognition, but... Interesting, right?
This is an interesting story.
Yeah.
There's another one that I'm keeping an eye on about
one?
FTX. FTX says that Wall Street heavyweights are among its creditors. Advisors to FTX say the collapsed crypto company owes a dizzying assortment of firms, including Goldman Sachs, J.P. Morgan Chase, Wells Fargo, and more.
Yeah, it's a 116-page document filed on Wednesday detailing FTX's creditors. The disclosure, though, did not reveal the nature or size of the debts, if any, and inclusion on the list doesn't mean a firm is highly exposed to FTX. As we always say when we're talking FTX, dun, 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 stay tuned, TBD. There's more to come. All right, folks, markets. We are seeing some buying here into the close. Just a few minutes left in the trading session. Some big earnings. We're going to head it over to our TV team. Bloomberg's Beyond the Bell. We're counting you down to the close. It starts right now.
100 closing in on 2%.
Stick with us. We are moving closer to those closing bells. Stick with us as we take you to the bell and beyond.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now we are about 2 minutes away from the end of the trading day. Romaine Bostic, Katie Greifeld, counting you down to the closing bell. Here to help take us beyond the bell. It's a global simulcast. Carol Master returning, Tim Stenovic returning, and we now welcome our audiences who are returning to see us. Bloomberg Television, Radio Quick Take, as well as streaming on YouTube. 1% gain on an S&P 500, right around the highs of the day.
Yeah, absolutely. Look at this. We're seeing some buying into the close here. The standout, though, the NASDAQ up about 1.7%. Also standing out, semiconductor names. They're up about 1.5% overall. And don't forget, Intel reporting after the close, Tim, that's up 1.1% right now.
All right, we just got some commentary from Aaron Kennan, the co-founder and CEO of Clear Harbor Asset Management, who actually painted a picture that was a little concerning. He thinks we're going to skate along a zero growth bound and see the Fed become much more accommodative in the second half of the year. He said that if the economic picture deteriorates further, we could see the Fed cut rates in the second half of the year.
And that seems to be the consensus if you look at the bond market. We know that, 50 basis points of cuts are priced into the second half, despite, again, what we've been
the Fed says
from Fed officials.
Yeah, it's really surprising to me.
It'll be interesting to see, though, if we get to that point, right? Because there is a broader question here as to if it is sort of a shallow recession, if it is not the worst case scenario, does the Fed really need to meaningfully move rates down from wherever that terminal rate ends up being?
Especially if they're right, still inflationary pressures that we continue to see somewhat in our economy, Romaine.
All right, a lot to cover here after the bell here. We are getting the closing bells right now, people clapping and cheering, and that's because it's green pretty much across the screen. The Dow Jones Industrial Average higher by roughly 200 points, or about 0.6%. The S&P 500 higher by more than 40 points, or more than 1% here on the day. And we should point out the NASDAQ, both the composite and the NASDAQ 100, higher by roughly about 2% on the day. Both of them, and we'll double check these numbers, but both of them appear to be closing above their 200-day moving average for the first time in almost a year. The Russell 2000 also getting in on the action, Carol, up 0.7%.
All right, look at the S&P 500. Most names in the index higher, risk on. 363 names, Katie, actually gaining some ground today. Only about 138 lower in today's session.
And if you look at the industry groups, there's a lot of good news here. Right up at the top, you have autos. A lot of that, of course, is Tesla after those reports yesterday. Energy, too, having a good day, up over 3%. You also have media and entertainment and those chip names. You look down at the bottom, not too many in the red, but way at the bottom, you do have telecom there, down 0.8%.
All right, let's get to some of the specific gainers. Katie, you mentioned Tesla, and this one pretty much holding on to all of its gains of the day, up almost 11% here at the close. Top of the S&P 500, the NASDAQ 100, up as much as 59% from its lows touched earlier this month, on track for, I think it is a fifth winning session. It's still off about 60% from its high back in 2021. You know the story, upbeat production numbers, demand, and so on. So nonetheless, a standout. We've got Intel crossing.
Intel crossing the wire right now. Let's start off with the revenue numbers, coming in at about $14 billion. I'm not quite clear of the comparison here, but on an adjusted basis, the street was looking for about $14.5 billion. So a slight miss there. Adjusted EPS coming in at 10 cents a share for the quarter. The street was looking for 19 cents. So that also appears to be a miss. Here's your forecast going forward. First quarter adjusted revenue, the range the company is giving, $10.5 billion to $11.5 billion. That would be almost $3 billion less than what the street was looking for. On average, the street was looking for about $13.96 billion. Intel, guys, giving a forecast range of $10.5 to $11.5 billion of revenue for the first quarter. You can see, right, guys, the share is now down about 7% in after-hours trading.
Again, I go to the press release to get commentary from Pat Gelsinger, the CEO of the company, who says that despite the economic and market headwinds, we continue to make good progress on our strategic transformation in Q4.
What is going on with this company? So first quarter adjusted revenue, EPS that they're giving, the guidance is at 15 cents. So that's also well below consensus by about 10 cents. The street was looking for 25 cents a share. I'm just piggybacking, Tim, off the quote that you were just reading. Where's the turnaround?
I think a lot of investors are asking that question as well. I mean, that's why Pat Gelsinger was brought in, to make this turnaround. The company's CFO...
First quarter adjusted gross margin, 39%. The street was looking for 45.5%.
Yeah, that's a huge miss.
Again, Tim, where is the turnaround?
I think that's a good question that will be asked on the earnings call. The CFO is saying that they're going for cost reduction targets of $3 billion this year, and they're setting the stage to achieve $8 billion to $10 billion by the end of 2025. So That's significant in terms of cost reduction just in the next couple of years.
Yeah, this is what they've been working on, but nonetheless, it's been a slow turn in getting it back on. I'm looking at something like AMD too. It's down about 1% here in the after hours, so we're seeing some spillover, Katie. But these are really disappointing numbers.
Really disappointing numbers, and you can again see that in the stock, down 5% at the moment. Stock had been down over 40% in the past year, but to your point on AMD, we know that they've been taking market share, so interesting to see them dip on these numbers as well.
And it's also interesting too, I mean, they're talking about cost reductions as you would expect with a report like this, but the question becomes, this wasn't a cost story for Intel. I mean, we know that they certainly had some fat that they had to trim, but this really wasn't about their costs. This was about them being competitive. This was about them transitioning to the new generation of chips and chip technology. And I guess the big question right now is, how far has Pat Gelsinger gotten them in that direction?
Well, listen, none of this, you talk to our Ian King, none of this happens overnight, right? It costs a lot of money. It's a lot of development. It takes a while to move the needle. And, you know, it's interesting, going into this, Cowen's Matt Ramsey put out a research notes, and he said, few names in our coverage have as universally negative sentiment surrounding the company's fundamentals as done Intel. And as a result, you know, you look at what they reported for this quarter and their outlook, it kind of plays into that narrative.
And we'd be remiss in not pointing out, I mean, yes, this does take time, but we're coming up on the 2-year anniversary of Pat Gelsinger taking over as CEO.
It's also come, though, at a time, and again, I'm obviously not making excuses for the company, and every other company has had to deal with this. The macroeconomic headwinds that they're facing right now, coming off a period of just really crushing demand, where a lot of these chip companies couldn't actually produce what was necessary for their customers.
Well, my retort to that would be is that when we do get AMD, which I think is next week, if I'm correct, when we do get NVIDIA, when we do get some of their other competitors, do you think we're going to see something similar, or is this sort of specific to Intel?
I think NVIDIA is a different story, just with the types of processors that they make, and you know, especially with the chat GPT and the AI stuff that they're focusing on. But yeah, it'll be interesting to see if we get a similar story from AMD, but they haven't had the same organizational challenges that Intel has had.
Well, even still, I mean, you are seeing shareholders a little spooked right now. You look at NVIDIA shares down post-market, some of those other competitors too as well, AMD. So even though it is a different story, these are different companies with different fundamentals, definitely sending a little bit of a shudder through the chip space.
Yeah, I just, you know, you got to wonder, it's not just about, you know, cost reductions, right? It's setting the company up to do well in the future and meet the demands of the semiconductor space. And you do have to wonder at this point, are they doing that?
Well, let's actually go. We're just getting earnings right now coming out of KLA. Of course, this is a big maker of semiconductor equipment and technology. Those numbers for the most recent quarter are actually coming in above estimates. EPS at $7.38. The street was looking for $7. Revenue coming in at $2.98 billion. The street was looking for $2.8. And as far as their guidance going forward, they're given a range of $2.20 to $2.2 to $2.5 billion, which is just around the top end of the range, would just about hit the average of estimates here. So two different business strategies here with regards to what KLA does and what Intel does, but it does appear to be a little bit of divergence in their forecasts.
All right, let's get to another one that's very important in terms of the consumer. We're talking about Visa. Visa coming out with its first quarter EPS $1.99, looks like a beat year over year. That compares with $1.83. First quarter net revenue. This too looks like top line beat, $7.9 billion versus $7.69 billion, the estimate. First quarter adjusted EPS, here's your key metric, $2.18, 18 cents better than what the street was forecasting. And first quarter cross-border volumes at constant currency up 22%. So playing into another metric. What are we seeing with Visa, Tim? It's up about
1.6. Now it's unchanged, 1.5.
Yeah.
You know, I'm interested to hear commentary from Visa, given what we heard from MasterCard earlier, where it warned that revenue growth would slow faster than expected this quarter. Getting investors concerned, getting just analysts concerned that inflation has put a damper on consumer spending. Will we get a similar message from Visa?
It'll be interesting, too. We were talking to a couple of strategists last week who actually said that MasterCard and Visa might be in a better position, primarily just because of their fee structure and the idea that they're not necessarily completely wedded to discretionary spending. So just like when we saw with the personal consumption numbers today, we're still spending on the essentials, you know, personal care, health care, and, of course, housing and things like that. As long as that keeps, you know, going through credit cards, that still would benefit a Visa and a MasterCard.
Well, to that point, I mean, you are seeing MasterCard move a little bit higher after hours, along with Visa up about, 0.5% after a pretty brutal day today. So maybe shareholders on the back of these Visa numbers saying maybe this isn't so bad.
All right, total processed transactions, 52.5 billion. The estimate was 52.9 billion. So we're getting some more in terms of what happened at Visa. But again, we're continuing to see some of these names move in the after hours. Keep a watch on Intel, seeing the pressure there. All right, guys, that's a wrap. Our cross-platform coverage, breaking down those earnings and more. Our cross-platform on radio, TV, YouTube, and Bloomberg Quick Take. We call it Beyond the Bell. We will see you again, same time, same place tomorrow. TGIF can't come soon enough. At the same time, watching earnings, watching the impact on the markets, but we love to get into some of the longer term trends that are impacting our world and ultimately impacting our business world and our financial world. And if you check out our next guest website, you'll read how ShareBite connects communities and companies across the world through the power of feel good, do good eating, whether you're in the office, at home, or somewhere in between. It's food with a mission, Tim, and it's something that we do talk about a lot here.
We got the co-founder and CEO of the mission-driven food ordering platform ShareBite with us right now. Dilip Rao is with us. The company works with a range of other companies, everyone from Barclays to Cowen to Peloton, Stitch Fix, Vornado, Warner Music, and really hundreds more. He joins us here in our Bloomberg Interactive Broker studio. Full disclosure, you and I met each other at business school quite a few years ago, but it's been a while. It's good to see you, Dilip. How are you?
I'm doing well. There's a strong Columbia nexus over here. So,
Was he a good student in school?
No comments.
We're not allowed to talk about our grades. It's actually true.
No grade non-disclosure.
Yeah, it's worked to my advantage over the years. Let's just say that. So tell me, give us a little update because you've been through a lot with the pandemic, with companies having their employees work from home. First of all, start with what ShareBite does and give us an understanding of what the company does.
Yeah, sure thing. So ShareBite is a mission-driven food benefits platform, and it's built exclusively for companies. And we have a three-part mission. So first and foremost, we help companies create a better place to work for their employees through food benefits. And by signing up and working with these major enterprises, we're able to take that collective purchasing power of companies, of these companies and their employees, and use it to drive value back to society as well as small businesses, all in the same transaction.
What does that mean, drive value back?
Yeah, so every time, so if you work at one of our corporate clients, you get a daily meal stipend or a meal benefit. And you can, and there's two ways that you can use that meal benefit. You can go on our website, which is the platform side, find your favorite restaurant. The type of restaurants that we have are all local mom and pop, all the way to premium quick service restaurants like the Sweet Greens, the Kavas, even the Paneras of the world, and so on and so forth, right? Takaya, Lemonade, et cetera, et cetera. And you find your favorite restaurant, hit the order button, and if you're doing a group order at the office, you can actually do that, and all the deliveries come packaged together for all of your employees, all of your colleagues, all together in the office in one delivery per restaurant. Then the second component is really the fintech side, which is called ShareBite Passport. ShareBite Passport allows you to take your company meal allowance and use it anywhere you want, whether it's directly at the merchant, at the restaurant, which helps them a lot. It avoids the third-party delivery sort of fees that, or other platform fees that others charge. Or you can use it on an actual third-party delivery platform if you wanted to. And it works everywhere, and it works globally. So we have companies ranging from hundreds of employees to 100,000 employees, that ranges the spectrum goes from tech companies, automotive, manufacturing, even professional sports teams, investment banks, private equity firms, hedge funds, et cetera.
Are companies still offering the benefit of food for their employees?
That's what I wanted to ask
you. We've seen a lot. They try to get their workers back to the office by enticing them with things like free lunch. Yeah. And then over the last few months they've said, well, we're going back to normal. No more free lunch for you.
Yeah. It's interesting because actually we're seeing the exact opposite, right? Because this sort of volatile economic environment started well over 12 months ago, maybe, right? We grew our revenue by about 5.5x last year in 2022, despite this kind of economic backdrop, with employees going through, companies going through layoffs, et cetera, et cetera. And what we've seen is this sort of gradual progression from C-suites and HR leaders and sort of total rewards leaders, looking at food benefits as a holistic kind of benefit. It's an investment in your employees, not necessarily an expense. And my belief and the company's view and the vision is just like 30 years ago, it wasn't common practice to get health insurance in private sector companies. 20 years ago, 401ks were all the rage. And then it was 10 years ago, commuter benefits, fringe benefits, transit, et cetera. The future of work, the current and the future of work is going to come down to food benefits. So
I'm excited.
Yeah, it's going to be
I'll take a lunch.
Exactly. And it's really about meeting your employees where they want to be. And, I have a lot more to say about that.
Well, help me out here, because we do have a company, full disclosure, that has been incredible during the pandemic and even after it for a long, long time. And you come in through our food court, there's tons of food, there's coffee, there's lots of great stuff. But again, and I consider it a very evolved company in its approach in terms of how it treats employees. And so we don't do it. So I'm
anymore.
So I'm finding it hard to believe that the trend, especially when I hear from a lot more CEOs, get your butts back to work, we want you in the office, that they're not necessarily thinking about, and then we're going to give you lunch. Tell me I'm wrong, or tell me.
Yeah. Look, we have actual data, right?
Yeah.
So those are the same CEOs, those are the same companies reaching out to ShareBite and saying, look, we pay in the mid-range or maybe even the lower range per employee per month, just for the real estate cost, right? $1,700 a month per employee per month, right?
Just for real estate?
Just for the real estate.
To have them have their butt in a chair at the
the
headquarters or whatever.
Just the rent, okay?
Yeah.
And they're saying, wait, it's coming back to the office is controversial, right? Because, people are kind of now set in their ways, just like, the longer the lockdown sort of happened, the harder it is to bring everyone back to the pre-COVID world. So what's really happened is a lot of companies are now, they tried the push influence, they're like, all right, no one came back. Now it's try to use the pull influence. Okay, can there be anything that we can incent the employees to actually make that investment in the commute or whatever that is,
right,
to come back to the office and rebuild that sense of community that largely people lost during this sort of lockdown era.
Can we go all Bloomberg? Can we all go like you're back at Columbia and you guys are in a class? Okay, are you profitable?
At the unit economics level, yeah. Every
what
product
level?
At the unit economics level. So our contribution margin, profitable. We will be profitable in the coming months. Our business has not only grown into this broader vision that we've had, but wherever we are right now, it still represents such a tiny portion of a rapidly growing ecosystem. It's other countries, internationally, it's part of your employment package, right? Food benefits, here's your food stipend, right? Here's your salary, here's your stock-based comp, here's whatever. Oh, and by the way, here's your food benefit. That's happening here.
Is it especially so like in the financial industry? Like, are you seeing any certain trends where, that is definitely taking off?
So financial industry has always been a food culture.
Because we never leave our desk.
Exactly. I spent a decade on Wall Street, right? So
journalism is like that too.
Yeah, even in 2008, when all the financial institutions were kind of staring into the abyss, the one perk that they never got rid of was the food benefit, the late night meals, because people are going to work.
Is this more late night meals, or is it more free lunch?
It depends on the type of company. So if we're talking about the investment banks and the private equity firms, they're late night meals. But if you're talking about hedge funds that don't have a culture of like really staying late at the office or burning the midnight oil, they work intensely hard from 5:30 a.m. till whatever. They're getting the lunch perk, right? So it all depends. No matter, we have thousands of different settings on our back end, right? That's what gives, the power of the API that we've built out. It's built for the enterprise, and it gives you the impression of having this, it's like those custom orthotics, right? It's like it's made for you because we're able to sort of toggle on and off the exact set of features that you want, whether it's time restrictions, date restrictions, budget, limits, geofencing, travel budgets, whatever it is, it's all done programmatically through our API. That's why, and it takes a long time to build.
And every meal that is bought, one gets donated, right? We only have about 30 seconds left here, but that's part of the
every transaction made on ShareBite results in a meal donated through our charitable partners, Feeding America, City Harvest.
What's the long-term goal? 30 seconds left here.
Yeah, we want to be the undisputed leader. We've already positioned ourselves as a leading food benefits platform that's built exclusively for companies, and the future looks really bright for companies like us.
Interesting. I wonder if if anybody's listening.
Yeah, I mean, I
know a lot of people
listening.
are listening.
I wonder if anyone's
You know what I
listening to
mean.
you and how you want lunch every
It's
day.
hard, like I said, it's hard because we have an incredible company that I had my lunch of stuff upstairs.
That was nice,
and
wasn't it? It was really nice.
Dilip, thank you so much.
Thank you.
Stay in touch. Dilip Rao. He's Chief Executive Officer, co-founder of ShareByte, joining us here in our Interactive Broker studio. We'll know we'll come back to him in the future. This is Bloomberg.
headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. I'm Charlie Pellet. Lots of headlines after the close of trading. Hasbro right now cutting about 1,000 full-time positions. That stock plunging after hours. Hasbro now down by about 9%. Developing story. We'll sift through the headlines, bring you up to date on that. Intel moments ago reporting a dire forecast for the current period, hurt by sinking demand from PC customers and tough competition in the lucrative market for server hardware. After hours, Intel dropping now by 7%. Visa out with earnings. It reported adjusted EPS for the first quarter that beat the average analyst estimate after ours. Right now, we do have Visa up by 1.5%. It was an up day for the Dow, the S&P, and NASDAQ. Tesla certainly lifted spirits today. Tesla up by 11%. Tech megacaps powering a stock market rebound. S&P closing at the highest since early December. S&P today up 44, now at 4,060, up 1.1%. The Dow up 205, up 0.6%. NASDAQ up 199, up by 1.8%. 10-year yield 3.50%, with the 2-year 4.18%. Gold down 0.9%, 19.29 the ounce. And West Texas Intermediate crude up 1.2%, 81.12 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We are so excited about our next guest. In fact, sorry, Charlie, if I missed the cue because we were talking with him. Over the next week or so, just big, broad picture, we're going to be hearing from some of the big media companies when it comes to earnings. Of course, Netflix already reported a blockbuster report thanks to a massive subscriber beat. When it comes to the media names, it's about grabbing eyeballs, boosting and holding on to subscribers by giving them great content. And our next guest, Tim, really gets this space in a big way.
Yeah, he's been in it as it's evolved in a really big way, from traditional broadcast and linear to TV, to the explosion in streaming and mobile, DVDs, everything. Josh Sapin is the former president and CEO of AMC Networks. You know him from such hits as Mad Men, Breaking Bad, The Walking Dead. It was spun off from Cablevision, Carol, back in 2011, and he's got a new book out.
I love it. The title, Third Act. I think about my third act because I'm still in my first act. Reinventing your next chapter. Josh Sapin is in our Bloomberg Interactive Broker studio. Thank you so much for coming in.
Oh, thank you for having me. What a pleasure.
We have so much to talk about. Do you still like the media world when you look back at it? Do you think it's just kind of unbelievable and what it was, what it's become, what it continues to evolve?
I think it's wonderful, and I can't get enough television. My wife and I sit down every night.
Seriously?
And think, no joke, actually, particularly new shows. There's this abundance of shows, and I think television, many would agree, what goes on the screen at home has come to dominate so much of the conversation. And so we sit down frequently and say, what do you want to watch?
What are you watching?
That's
Tell
what
us.
I wanted to know.
God, well, it's a bit, honestly, it's Academy Award season after saying that, so I'm trying to be current as a voter.
You are? Okay.
Yeah, on everything that might be,
So you have
that
all
I
the-
might vote
you
for.
have-
So
you have all the screeners.
So I've been racking them up. Well, they're also sort of findable, but I do have access to them. So, everything from Pinocchio to Tar to Babylon to Everything Everywhere All at Once, to the list goes on, a spectacular list, and then documentaries, and then foreign films, and so there's not enough time.
What about like quote unquote TV these days? Because TV these days it's such a loose
Do you
definition,
watch
right?
linear?
It's like, well, no, I don't even mean linear.
What do you mean?
I mean like, HBO
Yeah.
Oh, okay.
weekly, or a Netflix series drops all at once on Netflix. Like,
Yeah.
what are you binging? What are you streaming? That's not
Sure.
a
Well, I have
movie?
particular affection for AMC because of time there, and so the AMC bought the Anne Rice Library, and so Mayfair Witches is new, and Interview with the Vampire is wonderful, and as well as finishing up the end of Better Call Saul, and Dark Winds, and the list goes really on.
No Better Call Saul spoilers, please.
And on. So it's wonderful. But we do, of course, watch HBO, Netflix, Apple, et cetera, et cetera.
Josh, how do you feel about, like, it's funny, I watched Bad Sisters, which I adored. I don't know if you saw it, but I watched it week to week because it was one, and it was kind of fun to look forward to when it came out, and I hadn't done that. I mean, so often something gets dumped and I just sit there for hours. Do you like that model? Do you think it's a smart model? Do you think it's better that we're kind of waiting for something every week?
Well, I would defer to today's experts who are deep in the belly of the beast and can understand the implications of all that. I will just say, as a consumer, I don't mean this to be in any sense cute. I like it both ways.
You do?
I like to binge shows, and then I can talk about something that was on Hulu, which is my wife and I liked a show called The Patient with Steve Carell. I think a wonderful show, FX on Hulu, and we anxiously awaited watching new episodes each week. So I think it's wonderful both ways, depending upon the content. The business imperatives behind it are what they are, and people who are closer to it today can tell you more than I can.
I do think about like the explosion in just the demand for content and what that has done for directors, producers, actors, right? I mean, actors who you would think only go on the big screen, right? Like to have a series on one of the streaming services, it's a really cool thing, and I think we all benefit. But how do you think about the evolution if you go back to your early days, right? When I forget the name of the firm, but it became Time Warner Cable. Like, it's hard to think about what it was and what it's become.
Well, I grew up really in a desert of television, a paucity of anything that was worthwhile. There were rare
Norman
exceptions.
Lear, who's in your book,
Well,
which
actually,
we will get to, would maybe beg to differ.
Worth to talk about, because actually he was a really notable exception. Another person in the book named Bill Persky, who really featured strong women in his comedies, and happens to be a dear personal friend, so I'm very attached to both him and his extraordinary work, which began with Dick Van Dyke and Kate and Ally. But it was a different world, and it really was, if not desert, it was desert with few oases. And today it is land of abundance, and I think it's a wonderful land of abundance for creative expression.
Do you think, forgive me, Tim, but I just want to jump in, do you think we're getting better in terms of diversity and really serving different audiences?
You know, I'd like to think yes. I really would like to think yes, rather emphatically. And you know, shows are coming to mind that are really portraying people who look like the world. They don't look like a different world, and I think that's a virtuous, wonderful, and really truly, truly important thing, because media is so, it actually gets inside people's skin, and so if they see an embrace of diverse people, I think it really helps and influences behavior rather profoundly. I'll tell you an anecdote. Another person who's in the book is ex-Senator Governor Bob Kerrey, who went on to be university president and then banker, and is also, I should say, a poet along the way, and was earlier a pharmacist and military person. And
I think there's a fourth and a fifth act in there, but that's okay.
Yeah, exactly right. But he made a comment. We were fortunate enough years ago to have been involved with a show in its early years called Queer Eye for the Straight Guy.
Loved it.
And Bob commented that that show, when he was in Nebraska, had perhaps more to do with defanging homophobia than some legislation, because it made humans seem familiar who were different. And I think one sees that, you know, in theater, you see it in books, you see it particularly in TV, which is in your home every day.
Right.
You said theater. You run a theater, you own a theater as well in Greenport.
You really love media and content, don't you?
Yeah, well, that's what I want to talk about.
What's not to like?
I know.
Well, I think there is some stuff that has a lot of people concerned in the idea of short form stuff and watching on your phone. A study back in October by Omdia said that TikTok overtook Netflix to become the second most popular service in the U.S. YouTube was at the top when it came for people under 35 watching. Does that concern you at all?
You know, I'm not sure I am an authority on what the impact of short form and TikTok.
But from the perspective of art, from the perspective of, you know, what we are consuming.
You know, I guess, truly, if you don't mind, again, don't let me feign authority. I think...
Let's be honest. You know a thing or two about media. You've been in this space.
The social implications of it, the social implications, the long-term social implications of media, social, and even on art, are hard to predict. I'll offer a couple of comments, if I may.
Please.
One is that I think it's rich and wonderful that younger people can create. I mean that. I don't mean that just to be great media. I think young people, kids are at home, and they may be fashioning sort of expertise and careers in media by it was making YouTube videos and making TikTok videos. And I think it is an on-ramp to being creative people, because they're learning tools. No kidding.
I've seen it in my family with two nieces.
You see it in your family. So I think it's a sort of wonderful thing. And, you know, I think then there's a whole subject about implications of and social implications of, and I think one might need a sociologist or an anthropologist to talk about and figure out
all that.
We're going to continue, or you think about George Floyd, like would we have talked about it or had the conversations we'd had over the last couple of years if someone hadn't taken a video, just an average individual on the seat?
Yeah.
We're going to come back with Josh in just a moment.
Great, thank you.
Bloomberg Business Week is brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds that 70 to 80% of small businesses are good candidates for taking the employee retention credit. Don't bother trying to navigate hundreds of pages of tax code to learn if your business qualifies for ERC assistance. Let the tax professionals at Innovation Refunds do the work and help you secure the future you want for your business. Learn more at getrefunds.com.
All right, you're listening and watching Bloomberg Business Week. Carol Master along with Tim Stanovic live in our Bloomberg Interactive Brokers studio, live on YouTube and on Bloomberg Quick Take. We're going to come back with Josh Sapan. We're going to talk about his new book. It's called The Third Act, Reinventing Your Next Chapter. You're going to know some of the names that he profiles in that book and talks about their next acts. Some of them you won't, but they're all really moving. And I know you're going to want to stick around for that. That's coming up next on Bloomberg Radio.
Let's get a check on the latest world and national news. For that, we go to Nancy Lyons in the 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. The 5 former Memphis police officers involved in the violent arrest of Tyre Nichols are facing murder charges. Nichols died 3 days after being beaten during the traffic stop. This is Shelby County District Attorney Steve Mulroy.
Second-degree murder, aggravated assault, aggravated kidnapping, official misconduct through unauthorized exercise of power.
Steve Mulroy says the body cam footage of the incident will be released tomorrow night. New York jurors have convicted an Islamic extremist who killed 8 people with a pickup truck on Halloween of 2017. This happened along a popular city bike path. It took about 7 hours over 2 days to reach the verdict. Sayfullah Saipov could face the death penalty. The FBI has shut down one of the world's 5 most successful ransomware operations that extorted more than $100 million from hospitals, businesses, and other victims.
Attorney General Merrick Garland described how the scheme worked.
They infiltrated a victim system and stole sensitive data. Affiliates deployed malicious software. They demanded a ransom payment in exchange for a system decryption key and a promise not to publish any stolen data.
Garland's deputy, Lisa Monaco, summed it up.
We hacked the hackers.
Director Christopher Wray said FBI agents penetrated the hackers 7 months ago and helped hundreds of their targets rescue their systems without paying ransom. This week, they found and disabled the crooks' computer servers. In Washington, Irv Chapman, Bloomberg Radio.
The National Archives has asked former presidents and vice presidents to recheck their personal records for any classified documents. It follows news that President Biden, former President Trump, and former Vice President Pence all had documents in their possession after leaving office. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. I'm Charlie Pellet. We check the markets all day long at Bloomberg. The Dow, the S&P, NASDAQ all advanced today, but lots of after-the-bell news. We begin there. Intel shares, they're down after delivering a dire forecast for the current period, hurt by sinking demand from PC customers and tough competition in the lucrative market for server hardware. Right now, we've got Intel dropping after hours down by 7.5%. Visa and MasterCard saw purchase volumes on their cards climb less than expected in the final 3 months of the year, a sign that historic levels of inflation have begun to put a damper on consumer spending. After hours, we heard from Visa. Its shares up now by 1.5%. Toy maker Hasbro is cutting 15% of its workforce, or about 1,000 jobs, after a disappointing holiday shopping season. Hasbro after hours down by 7.4%. A stock market rebound today with the S&P 500 closing at the highest since early December. The S&P up 44 at 4,060, up 1.1%. The Dow up 205, up 0.6%. NASDAQ up 199, up by 1.8%. 10-year yield 3.50% with the 2-year 4.18%. As for the market backdrop, Aaron Kennan is CEO at Clear Harbor Asset Management, and he was our guest right here on Bloomberg Business Week.
I think the market is trying to peer through the next set of steps on the liquidity side, specifically how the Fed is going to respond. I think 25 basis points at the next meeting is sort of somewhat cooked in the books, as they say.
And again, 10-year right now, 3.50%. Spot gold down $16 the ounce to $19.29. Drop there of 0.9%. West Texas Intermediate crude up 1.3%, $81.17 a barrel. Tesla, after earnings last night, surging today by 11%. And that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Bloomberg Business Week. Carol Master, Tim Stanovic. We want to get back to our guest still with us, Josh Sapin. He is former president and CEO of AMC Networks. We want to now talk about his new book, The Third Act. He's mentioned it. We have two, Reinventing Your Next Chapter. He's still with us in our Bloomberg Interactive Broker studio. So you've talked about some of the people in the book. Tell us, first of all, why you wanted to write this and put it together.
Sure. So thank you for asking. So about 3 or 4 years ago, as I contemplated the end of a conventional career,
Was that hard?
Well, yeah, because I loved it so much. Great company, great place, great people, great shows, and very attached to it. But there's an inevitable time to do something different.
Right.
And so I just began to observe people, some of them like me, some different in what they did, if they had the benefits of continued health and a degree of means that gave them some flexibility. And I became a little interested in what do you do after you do what you do if you have that opportunity. And so I began to observe sort of the good, the bad, the indifferent, and the spectacular. And so I thought it was a good subject maybe, and I'll see if I can write a book about it. And so I presented it to a publisher, and they said, okay. So there we go.
How do you think about it in the context of your own career, though, of your own third act?
Well,
like, is this book your third act? Is this book a second act?
That would be a little meta. Look, what are you doing? Well, I wrote the book. That's it. I think it's a part of it, but I have some things that I'm starting to do that have been pretty appealing to me. I've been working, I mentioned to you, Columbia University, and I've been volunteering actually at the Fortune Society with people who have been recently released from prison, which a friend of mine is involved with, and working on making some independent films, which is near and dear to my heart. I was at Sundance last week, and so a bunch of different things.
I think it's so important because I do think there are people who get through some really significant accomplishments, you know, and maybe think that's it, and then you realize, wait, you got another runway. You got more things you can do. Some of the names in your book, Josh, are definitely household names. We would know who they are. Some of them aren't. Go through some of the names. And I'm curious how you decided the list.
Sure. Well, you know, I worked with a wonderful editor who has great judgment and I think helped craft the balance of the book. And she and I thought that it would be good to have a mix of people who are well-known and who one would recognize, Robert Redford, I mentioned Sundance, was a painter and actor. His first film direction job was, he won an Academy Award for Ordinary People, and obviously an environmentalist, and really then gave freedom to independent film through the Institute. The festival's better known, so he's involved. Alan Alda, remarkable guy who I had the privilege of meeting. People my age know him as Hawkeye MASH, but he went on to do 8 years of a science show on public television and then set up the Alda Institute for Communications and trained no fewer than 5,000 doctors in how to communicate better with patients.
Incredible.
So pretty darn remarkable
Right.
Use of time and sort of agency. And Gloria Steinem really needs no summary. She sort of speaks for herself, I think, just sort of the modern feminist.
How did the people who you profiled, who you write about, come to mind for you? Did you tap into your own network?
I did. I did a bit.
That process.
I did a bit, and then I had the help of a woman named Ellie Strauss, who did some research. She's a friend of my daughter, actually, and she's a teacher, and so I was able to impose upon her and say, do you have some downtime? Because she's a very bright young woman, and so she did some research, and we found people who were not known at all. There are 45 of those, and they're just great to read about. I'll mention a couple. I was saying it when we were talking. Hope Hartley worked. She's 72. She had a career at Verizon. She had attended the Brooklyn Children's Museum as a kid, and then she founded, as the chair, the Bronx Children's Museum that opened its concrete doors a couple of months ago. It was reported in the New York Times. Jamal Joseph grew up in New York. He was got into some trouble twice. He became a Black Panther. He served some hard federal time and then got degrees and advanced degrees while in prison, taught at Columbia, and then developed this thing called Impact Theater, which really advances kids and teaches them theater, and it's immensely helpful to them. There's more fanciful people, a guy named Art Schill, who became a stand-up comedian in his late 70s. How wild is
Well, I love there's also, I think, a woman who became a flight attendant in her
Yes.
50s, somebody who became a firefighter.
Yes.
I love those stories.
You know, they actually just elevate me.
Yeah.
You know, to think, I'm going to go be a firefighter.
Well, it's so funny because we had a guest earlier in the week, and I'm not being critical, but was talking about that by the time you're 45, you're middle-aged and nobody wants to hire you. And then to see the third act, you know, just there are people who are so productive well into their 80s, 90s.
Yeah, and there's a guy named Leonard Tao who is 94 or 5, who is doing, it's indescribable what he is doing with his time and resource.
What did the research of the book and writing the book, putting it together and learning about all these people teach you about the way that you want to spend this time?
Yeah, well, I think if there was, I guess, a lesson in it, it was for me, sort of don't lay on the couch. It's not agreeable anyway, and don't watch too much television.
I was just going to say, wait. We started talking about watching.
Don't watch too much television. Maybe don't watch daytime television, or don't binge during the day. Get out of the house.
Unless it's Bloomberg TV.
Unless it's Bloomberg TV. Absolutely.
Yeah, but it is interesting in this time post-pandemic where it's like, go live life.
Yeah. Well, you know, it's really, honestly, the few little things I've done, which they're inconsequential in the scope of things, but they've been, for me, I'm not so sure they're helping anybody in the world. I hope a teeny bit. They're certainly making my eyes open to the world, because my world has been pretty, I wouldn't say monolithic, but familiar for a very long period of time.
We really enjoyed this, and good luck with the book. And when you're on your third act or fourth act or whatever, come back and come talk with us again.
Thanks so much for having me.
We wish you
appreciate it.
We wish you well. Josh Sapin, he's former president and CEO of AMC Networks. Check out his book. I put it out on Twitter. Josh, his new book is The Third Act, Reinventing Your Next Chapter. So delighted to have him here in the studio. Thanks again. All right, everybody, you are listening and watching Bloomberg Business Week. We're watching Intel. It's been lower in the aftermarket. It's going to be a name that we're going to follow into the Friday session and so much more. Carol Master, Tim Stanovic. This is Bloomberg Radio.
company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. 4:53 right now on Wall Street. Toy maker Hasbro cutting 15% of its workforce, 1,000 jobs after a disappointing holiday season. The company also projecting it will fall short of fourth quarter adjusted profit estimates. After hours, we've got Hasbro shares plunging now by 8%. We're also keeping an eye on Intel. Chip makers lower along with Intel. Intel down in late trading after giving a dire forecast for the current period, hurt by sinking demand from PC customers and tough competition in the lucrative market for server hardware. First quarter sales will be $10.5 to $11.5 billion. That compares with an average analyst estimate of $14 billion. After hours right now, we've got shares of Intel lower by 8.1%. Visa and MasterCard saw purchase volumes on their cards climb less than expected in the final 3 months of the year. Chipotle Mexican Grill gearing up for a hiring blitz. With that story, here's Bloomberg's Steve Rappaport.
Help really wanted at Chipotle. The Mexican food chain is adding 15,000 jobs across its locations in North America. Chipotle has more than 3,000 restaurants in the U.S., and the push is meant to ensure they'll be fully staffed for the company's busiest season, stretching from March to May. Chipotle reported a 15% gain in revenue for the first 3 quarters of 2022. Fourth quarter results are coming out next month. In New York, I'm Steve Rappaport, Bloomberg Radio.
Bed Bath & Beyond said it received a default notice from J.P. Morgan Chase. Those are the company stories we're following. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenovec on Bloomberg Radio.
It is Bloomberg Business Week. Let's get a check on the latest world and national news with Nancy Lyons in the 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. President Biden is taking an economic victory lap this afternoon in a Washington, D.C. suburb. He told union workers the U.S. economy got some good news with a slightly better than expected GDP that showed a growth of 2.9%.
And I don't think it's unfair to say that this is all evidence that the Biden economic plan, because y'all, is actually working. It's working. It really is.
Biden says now we need to protect the gains that the country has made from what he calls MAGA Republicans, who he says want to destroy the progress. Well, the nation's attorney general says a ransomware group has been put out of business.
Known as the Hive ransomware group, this network targeted more than 1,500 victims around the world since June of 2021.
Merrick Garland says the group was accused of extorting or attempting to extort hundreds of millions of dollars from people. Congressman Jim Comer says he expects 40 to 50 investigations to be conducted by the House Oversight Committee that he now chairs. He tells Bloomberg one of his priorities is looking into how COVID funds were spent.
There was a record amount of spending in the name of COVID and in the name of stimulus, but yet nobody in the House of Representatives has had any type of oversight over that spending. And we hear reports every day about PPP loan fraud, about unemployment insurance fraud.
Congressman Comer says they'll also be looking into what happened with U.S. equipment that was used in Afghanistan. All 5 Memphis police officers involved in the violent arrest of Tyre Nichols earlier this month have been charged with second-degree murder, and they've been taken into custody. Nichols, a black man, died in the hospital 3 days after the traffic stop. Body cam footage of the incident will be released tomorrow, and the Memphis police chief is expecting protests. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Back to you, Carol and Tim.
All right, Nance, thank you so much. You are listening to Bloomberg Business Week. Carol Masser along with Tim Stenovec. Hey, guys, we just want to take you back to Intel because we're continuing to see this stock under pressure in the after hours. Let me just pull it up on my Bloomberg. It's down about 8% here.
Yeah, it's sliding in late trading. This after it gave a dire forecast for the current period. We talked about this earlier. We knew this was coming, Carol. It's hurt by sinking demand from PC customers. Also some tough competition when it comes to the server hardware market, which we know is lucrative.
Yeah, we know sentiment's been kind of negative, and so some concerns. But, you know, some of the numbers At the low end of the forecast range for the outlook, Intel's revenue would be the smallest quarterly total since 2010. So you're talking about in a long time. We know it's attempting a comeback. It's been cutting costs. It's got a plan under the new CEO. He's been there for a couple of years, Pat Gelsinger. And so, will investors be patient enough? Right now, they don't look like they're too patient. Stock was up 14% year to date ahead of the earnings release. But as we said, that's going to get a haircut tomorrow because right now it's down about 8%. So,
and we'll see what they say on the earnings call too.
It's a good point, right?
That could change things. Look at Tesla, what Tesla did today as a result of Musk's comments. I also want to keep an eye on Visa. Similar story to.
Oh, and can I just say AMD is also down, still about 3%.
Okay, that's important. We're going to get AMD earnings in the coming days as well. Visa is up in the aftermarket 1.5%. Spending on Visa cards climbed 1.7% to $3 trillion in the company's fiscal first quarter. It did miss the 3.16 trillion average analyst estimates compiled by Bloomberg. We got MasterCard a little earlier today. Volumes jumped 11% to 1.73 trillion, which also missed estimates. Taken together, Carol, purchase volumes climbing less than expected, a sign that historic levels of inflation may begin to put a damper on consumer spending.
Yeah, and this is something we keep a watch on. We saw consumer spending, pull back a little bit in the GDP numbers that we got earlier today. So we're keeping a watch, and this is why reports and releases from Visa and MasterCard and others really help tell us a lot. We'll feel that way when we get into that retail portion of earnings.